Since all of you have confirmed my voice is audible, so let us start. Let us prepare ourselves for the very important upcoming event. And here we are assuming that okay, whatever one strategy, two strategy, whatever we are going to discuss, I am not recommending it as a trade, and I assume that you understand the risk associated with any option trades or any option trading strategies, right? So that should be taken as a disclaimer. So a big event is coming 11th of December when we are going to get the results of these elections which are happening. Primarily, three states are good: Chhattisgarh, Rajasthan, and MP. And market can definitely give a swing to downside or upside, or can remain very very dull depending upon what is the outcome of these elections. And since I think elections are happening somewhere on 8th, so maybe 10th when market opens. So today is Thursday, tomorrow again there is market, and then there is Saturday Sunday holiday. Then 10th when market opens, maybe we will have some exit polls and some opinions that okay, which way the elections are going to turn. So we may have a big swing on 10th also. So today or tomorrow may be the right time to create some strategies which we want to trade basically for the event. So basically it is expected that okay, in these kind of events markets definitely take a big swing, and that swing can be in either direction, that swing can be in both the directions also, right? So let us go to nifty and see what kind of trades are possible wherein we are not taking any kind of a huge risk. So one thing is very clear: in these kind of events you don't know what can happen to the market. So it's always uh, uh, advisable to take trades which are not giving you any kind of a unlimited risk. So I will say the trade which I'm suggesting should be a limited risk trade, and we must know how to cover that risk also, right? Now market is somewhere around 10,650, close to that, uh, plus minus few points. So what can be a good trade? I will say, let us say I am a trader and I can take a risk of roughly around 20 rupees. So what can I do? Let me select this pen. What can I do? Uh, okay, I can buy a put of, let's say, 10,400. If I buy a put of 10,400, it is it is costing me 93 rupees 60 paise, roughly around 93 94 rupees. And to reduce my cost, I can sell a put of 10,300, which is at around 70 71 rupees. So in this trade, roughly in this spread, what is happening? This is a bear put spread. In this spread, what is happening? My total risk is roughly around 20 23 rupees, and that risk is in case market really goes up, I'm maximum I can lose is 20 23 rupees, and maximum profit in case market really tanks down, I can make maximum profit up to um, 77 rupees, which is pretty high, very good risk reward ratio. And then I must have that kind of a knowledge that okay, in case market goes against my direction, in case market goes up, how I can recover these 23 rupees also. So I should be ready for that. I should keep money for that. That okay, trade size is very important. You should trade only in those many lots, so that in case market goes in opposite direction instead of going down, if it goes up, you may not lose the whole 23 rupees on 11th December only, because expiry is pretty far away. But major portion of that, suppose market goes to let's say 11,000, 11,100 or something like that, so major portion of these 23 rupees you will be losing. So you must have a plan ready that okay, how I am going to cover this 23 rupees also. So then it becomes a no loss strategy for you. And in case market tanks down, market goes to let's say 10,000 or anything like 10,100, 10,200, or even 10,300, you can definitely make, may not be all 77 rupees on the same day, but out of that maybe 40 rupees, 50 rupees we can take on the same day, and we can book profit, right? This is one way of trading this kind of an event where market may go down, right? So another thing is that market may go up also. You do not know, it is totally dependent upon what kind of result we are going to see. So if I see on the upside also, on the call side also, if I take this trade, uh, 11,000 and 11,100 pair, this pair, which will be costing me, if I buy it at 59 rupees and sell this in 36 rupees, this is again costing me 23 rupees. Now, here again, my risk is 23 rupees. Wherever the market goes, my maximum risk here is 23 rupees. So, in case market goes up, I can make 60, 70 rupees as a profit. Suppose there is an outcome that okay, BJP wins all the elections, and then market suddenly goes to 11,200, 300, 400, and then definitely I will be making 60, 70 rupees, which is a huge profit. And in case market suddenly goes down because let's say Congress wins all the elections or major elections, then market may go down. Then in this uh, bull call spread, I will be bound to lose 23 rupees, out of which maybe 15, 16 rupees I will be losing that day. Balance 7, 8 rupees I can still cover up. And I should be ready that, okay, in case market goes down, how will I cover this balance 15 rupees or balance 23 rupees also? So that ultimately, whichever direction market goes, you see, it's not that, okay, on 11th of December, markets will end. Markets will still continue. Markets will be there even for the December series for till 27th of December, right? So we must be ready that okay, in case my opinion goes wrong, in that case, how I am going to cover this loss and still I am not making any losses for the month. Rather, you can still make some profits. If you have any opinion that okay, you think market will go down, better to make a 10,400, 10,300 kind of a pair on put side, which is this pair, right, which is giving you a risk of roughly around 23 rupees. And in case you are of the opinion that okay, market will go up and it will go up substantially, then this is the pair you should be trying, which is 11,000, 11,100. And if you are very, very conservative, you can try 11,100, 11,200 also, which will cost you only 15 rupees. And you must keep money so that in case market goes in opposite direction, how you are going to cover this 15, 20 rupees also. If you do not have any view but you still feel that okay, market may go to one side but I'm really not sure which side market will go, then one of the options is, if you're really I'll say well versed with option trading, one of the trick you can do is you can take both the trades, right? You can take both the trades. You're taking 20 rupees risk on the put side, you're taking 20, 23 rupees risk on the call side. Whichever direction market goes, it will give you 40, 50 rupees. On other side, you must know how you are going to cover that 23 rupees also. Net net, you will not be in a loss in case market moves in one direction. Net net, it will be, even if you're not able to cover the opposite side. Suppose you have taken both the trades, and on put side you are able to make money, on call side obviously then you will be losing money. But net net there will be a profit. And secondly, if you have that kind of idea that okay, how I can make adjustments to this strategy so that on call side also I do not lose that 23 rupees. So whatever is your profit on put side, that will be your net profit, right? So you can take one of the trades, you can take only call side, you can take only put side, and you can take both the trades also. And only caution is that you must understand what kind of risk is associated in this strategy. Suppose you are taking this put side strategy, risk associated is only 23 rupees. 23 rupees per lot means 23 into 75 rupees, roughly around 15, 1600 rupees, right? That is the risk. So accordingly, whatever is your risk appetite, so if 1600 is the risk, you can make 6000 rupees in that trade if market really tanks down. Similarly, risk reward ratio on call side also is very, very similar, risk of 15, 1600 rupees, and reward of more than roughly around 6,000 rupees, right? Uh, so my request is do not forget to like this video, because this is a trade which many times we have not discussed in our workshops also, but this is a trade which we are also taking, right? And we are sharing all the information with you. So at least we expect that okay, there are a decent number of likes. You can share this video to some of your friends who are looking to trade. Two three things you must keep in mind. One thing is your trade size. The trade size should not be very, very big, so that you see ultimately, if you're doing it, let us say in a huge quantity, then even 20 rupees loss can be a substantial loss, right? And secondly, once you have already taken this trade in huge quantity, obviously there is no money left with you for making the adjustments to cover that 20 rupees also. Ultimately, the aim is I am taking a small risk. right? And in case things work in my favor, I will be making a very decent profit. In case things do not work in my favor, I still have a plan ready which will uh, almost nullify whatever is the possible loss in the trade, right? So I would suggest take one-sided trade, maybe based on whatever view you have. Take either put side trade or call side trade, and definitely, in case market moves in that direction, that will be a huge hit for you. And if it doesn't work in that direction, then obviously you can always recover this 20 rupees by shifting your puts, by shifting your calls, whichever trade you have taken. And from 11th to 27th, you will be definitely able to cover more than 25, 26 rupees, even if market goes in an opposite direction, right? So you can say this will be as good as a no loss trade, right? So Sanjeev says, what about go with the long strangle? Long strangle, Sanjeev, I can't say anything. So because IVs will be high, they are already high, and even if the market moves substantially, still, because after the event, IVs will not remain same, right? They should reduce drastically, and hence long strangle may not work at all, right? You don't know. So long strangle again, with high IVs, if you're initiating a long strangle and market doesn't make a big move, then the loss in long strangle is substantial compared to this strategy. The loss in long strangle will be pretty high here. Even if you're doing both the trades, the maximum loss to you can be 15, can be 15 plus 15, 30 rupees, uh, right? Is outcome same as uh, deep in the money interesting spreads? I will say deep in the money interesting spreads, Kiran. The main problem in those kind of spreads in these kind of markets is whether you are able to execute the trade pretty well or not, right? So if you are able to do that DIM, then they are totally, I think, no loss strategies. In this case, you need a little bit of tweaking if the result goes against you. If the result is not in your direction, uh, then you must know how to cover this 15, 20 rupees, whatever is your maximum possible loss, right? So slightly different. And here you have there also you're playing in both the directions, but their execution is a challenge. In this case, execution is not a challenge, Kiran, right? How use of IIV before event and down will be useful for event. You see, there are two things Mr. Ramchandran is asking about IV. You see, there are two things. One is whether we are doing an IV trade and whether we are, so it's whether you're doing a Vega trade or whether you are doing a Delta trade. Implied volatility is one of the factors, right? Implied volatility should go up before the event and should go down after the event, but it the difference can be pretty small also. Other thing is the delta effect. What is the swing? So whether you are playing for IVs or whether you are playing for the swing, the trade should be such that it should take care of both the things. It's not only the IV, there are other things also. So suppose you're making an IV trade wherein higher IVs are sold and lower IVs are purchased, something like a double calendar spread, but market makes a much bigger move. So whatever is the benefit of employed volatility, whatever is the Vega benefit, that will get all nullified because of unfavorable delta of your trade, right? It's not only IV, it is the swing also, which is important. Hope I have answered you, Mr. Vile. So Mr. Bharat says you just joined. So we will be uploading this video, Mr. Ganesh, so you can see it again. Uh, no over, Mr. Ravinder, overpriced. There's hardly overpricing because you're buying, you're selling also. So if you're buying overpriced options, you're selling overpriced options. So hardly it matters, right, Mr. Deepak? So you're selling also, you're buying also. Basically, you see what you are doing is you're taking a trade at 10,400 at around 20 rupees. Otherwise, 10,400 is 93 rupees. Can you see the positive thing of this trade? Only 20 rupees you're spending, as if now 20 rupees is 10,000, even 9,900 is 22 rupees, right? So instead of seeing that, okay, market will go to 9,900, in this case, we are seeing even if market goes to 10,400 or 300, you can have a good profit, right? What data is good? Not a right forum to explain all delta, theta, etc. So you need to understand the intricacies of Greeks and how you can use them. Maybe you need to attend a workshop. So even Mr. Kobal says how to understand open interest. We have given uploaded many videos on how to understand open interest. So please go through those videos, right? But this strategy, there is no chance of any kind of a big risk, and it should work pretty well with any scenario. You see, there can be these three scenarios: market going down, market substantially going up, or market not moving much. So with a right kind of sizing of the trade, you can take care of any of the scenarios. And it's always advisable that in case you are taking any of these trades, better to be in front of the screen for that day, so that suppose it happens that okay, first market goes down, so that will give you an opportunity to scare off your put spread and make money. And if you do not do anything, and market later on, let us say there is some swing in the results, and market swings in opposite direction, so then you have lost that opportunity of booking the profit. So if you are not in front of the screens on 11th of December, I will say better not to put up any trades. Right? Events, generally you will see events are, we all feel that okay, events are good time to make money, but many times it has been seen events generally uh, end up giving you losses only, right? So be well prepared. Understand the strategy well. If you understand all the intricacies of the strategy, only then do that. And that window of squaring off your trade may be available only for 15-20 minutes, and if you do not square off at that time, the markets can swing and go to opposite direction, and although you had a winning trade, still you are not able to make profit. So that is also possible. So my only request is keep your trade size very limited. Understand the strategy that okay, when will the profit come, what to do in case the market moves in opposite direction to whatever you has analyzed, how you will cover up these 15-20 rupees also. And third thing is whether you are available to book any profits in case market goes in your favor. So all three things you must take care if you want to trade this event. Otherwise you are a better trader if you just avoid this event at all, and from 12th of December continue doing your normal strategies, right? Please like this video so that and share this video also to whomsoever you feel is useful, so that everybody can be benefited. I have seen lot of traders, in spite of doing a right kind of a initial planning in the trade, not able to make profit during these events because they think that okay, it's not necessary to be present there. So if you are in a job and you will not be observing the markets live, it's better not to take up these trades, because you never know. You see, opposite is also possible that okay, you may not get the um opportunity to square off the trade that day, but you may get it another day. But then we should be ready. We should be ready that okay, if I'm taking up this trade, market makes a swing in any direction, I should be able to cover up my profit quickly or cover up my loss very quickly, right? Kiran says, can we keep those interesting spreads till expiry? Kiran, you can keep those spreads till expiry also, because there is hardly any loss, right? If you have done it well, there is hardly any serious loss in that, hardly 5-10 rupees of risk. So even after the event, market can go in any direction. Those will be good trades. They can give you benefit. But during the event, if anytime you find that okay, those trades are giving you a profit of 40-50 rupees, I think it makes sense to scare off those trades, right? It's always better to book your profits, right? Profits on screen are not your profits. Profits which you have booked are your profits, right? Profit on screen can become a loss in 15 minutes. In 15 minutes uh, are also high. I will say it can become a loss in 5 minutes. So if there is a profit in that interesting spread, Kiran, I will suggest book it. If there is no profit, then you have a choice. You can continue with that because there is hardly any loss in that trade, right? Please do not forget to like this video, and so that others can be reached. And I am saying uh, possibility of doing such trades is today, maximum tomorrow. I do expect a swing in the market based on exit polls or opinion polls or whatever, which will be there on 10th. So today and tomorrow is the opportunity. And today there is Bank Nifty expiry. So be very cautious. Do not try to execute these trades when there are movements because of expiry, right? So it's better to trade maybe before 2 o'clock. So we do not have or maybe go ahead and do the trades tomorrow, whichever direction you feel like. And Okay, Kiran is saying I have faced the real experience during. Yeah, I remember Kiran, right? So although your trades were good, but just because of panic, you scared of the trades. Otherwise, those trades would have given you good profit. So that's why I'm saying, do not do any trade wherein there is a unlimited risk. In these trades, there is no unlimited risk. The maximum risk is only that's those 20 rupees which we are leaving, right? So in such events, they can be very scary. Market can go down 500, 600 points and then come up to zero and then go up by 300, 400 points. So there can be swings in both the directions. I have seen traders booking losses in both the directions rather than booking profits in both the directions. Because if you are not hedged, then it will be very difficult to, you see, not to panic. Obviously, when money is involved and you are not hedged, you do not know what is the bottom or what is the top of the market. So anything can happen, right? Mr. Geetam Singh says, "Can Nifty back from here?" Anything is possible, Mr. Geetam. Today night, if you see, okay, some settlement done or some announcements done, and Dow Jones up by 2-3%, tomorrow you can see market will be again towards 10,900. So never underestimate that market will not go down or go up. As of now, we are trying to discuss. You see, markets can go anywhere. You have to give that kind of a freedom to the market to go anywhere. It's stock market. It's not a something which is very certain, right? So it can definitely go anywhere. Never ever base your trades on thinking that, okay, this is not going to happen, that is not going to happen. Whatever you miss, market will take that route only. Let me tell you, if you are keeping one loose end, that loose end can give you heavy losses. So here I am not discussing any markets, I am just trying to give you an idea what kind of a trade. Although if you have done a workshop, we have some other trades also. There's those interesting squares about which Kiran is talking. They are also there. We have also done that. These are some additional trades which we are suggesting. If you feel comfortable, only then do these trades. If you are not at all comfortable, I'm saying comfortable means 100% comfortable about what is the trade, what is the inherent risk, and what you are going to do in case market is not in your direction. How will you cover those trades? So I do not want even single paisa loss from this kind of a trade. So if you are understanding these trades 100%, only then go ahead with these trades. Otherwise, do not, just observe, note down the trades, observe as if you have done on a piece of paper, and then you see what kind of opportunities market has given you on 11th of December, right? And so that you are very well prepared for next events. Obviously, elections will be coming in different states even next year also, right? 8th and 9th of December. Already many of you have enrolled, so anybody who still wants to enroll, you can contact us on these numbers. 8th and 9th of December, we have a workshop in Noida. I am Pradeep Singh. I will be there, and with me, my partner, Mr. Sunny Malhotra, will also be there. So contact number is 958-285-3463, 9717274138, right? Or you can contact on our website, which is www.theoptionschool.in. From there also, you will get some details about the content of the workshop, right? Okay. I have 1 lakh to Mr. A Cipher. 1 lakh only for options. Will it work with option strategies? You see, market do not know whether you have lost money or not, right? Market is market. So there is no concession to anybody if he thinks that, okay, market will give you some concession because you have lost money, so next time you will make money. No, those kind of things do not work in market. Sorry to say that, Mr. A Cipher. So markets can be really cruel if you are not doing your strategies, doing your trades in a well planned manner, right? So there is no guarantee that, okay, because you have lost 95K, you will recover that money. No, you can further lose if you are not changing the way you are trading, right? If you follow the same methods, again, I don't know why the result should change. Okay. One more risk is option circle limits. You cannot scare off. Yes. So that is why, Kiran, again and again I'm saying, do not take any trades wherein there is a unlimited risk. There can be circuit limits, although we do not expect that to happen, but anything can happen. You see, the price range, when market suddenly move beyond the range, obviously the prices of options need to, a new range needs to be given by exchange, and then it gets updated by the time market can reverse. So many times, although market has gone to one direction, still you are not able to trade at the right price. So all those things will happen, and we know these things will happen, right? Once we know these things will happen, we should be really prepared for that, right? Mr. A. Cypher says when market shows some green, it goes gap down on very next day. You see, please do not make any such assumptions. Anything is possible. Market can be green for next 10 days. Market can be red for next 10 days. Market can be green for 5 days. Can be red for 10 days. So there are no patterns, right? These are very very uncertain things, and why we should drain our energies on following these things, right? Like this, right? Mr. Deepak says, no, we are not trading in any currency options. Can you go over hedging sold options? I have already given, so this video will be uploaded, Mr. Ganesh. You can see that maybe in few minutes from now. Bangalore workshop, you have to visit our website, Mr. Rangappa. That is theoptionschool.in. And there, if we have announced any Bangalore workshops, I think there will be a Bangalore workshop in the end of January or beginning of February, right? So do not forget to like the video, make your comments, ask your questions in the comment section also. You see, generally we have a lot of interaction in the live session, but then in the comment section there are not much interaction. So I will say, please go ahead and make your comment, write your comments after the video is uploaded. We try to reach and reply each and every comment. I do share this video if you know somebody who is going to make any risky trades in options because of this event, thinking he can make huge amount of money. Do share this video so that even if you are able to protect loss for few people, that would be a great thing to do. And if you are not subscribed to this channel, please do subscribe to this channel so that whenever we are doing these videos, you will get the notification. Right? Thanks to all of you, and have a great day. Have a safe trading event. Hopefully we may get in touch again before the event. Let's see. Right? Thanks to all of you. Thank you.